Right. So TMRT Retail Limited, the company or TMRT is engaged in the business of retail. The company follows financial year 31st March. The company also plans to get listed in India in the next 4 to 5 years. During 2029, the company had noted extraordinary shrinkage of inventory at one of their stores. Post-examination analysis by the in-house inventory shrinkage team, the management came to know about a fraud of 19 lakh by the employees comprising of the head cashier and the PRO. TMRT has a joint venture DT Limited which is engaged in the business of trading of goods. DT Limited appointed new tax auditor for 29. DT Limited follows calendar year 31st December for statutory reporting after obtaining the requisite approval. The appointment of new tax auditor was done after 31st March. For the reporting for 31, TMRT management plans to have BKP and Associates as their internal auditors. BKP and Associates also happen to be the statutory auditor. Oh, statutory auditor, internal auditor cannot be the same. However, the management has been advised by a consultant that it cannot appoint statutory auditor as the internal auditor because it would lead to the issue of independence. BKP and Associates have been auditing TMRT for the last 3 years and had considered management override of control as a fraud risk and revenue recognition as a significant risk for TMRT. So these are the presumed fraud risk as per SA 240. Right? These are the presumed fraud risk. Okay. Well, yes, BKP and Associates are evaluating whether they should drop both management override and revenue recognition as significant risk for 32, considering they did not have any problems or observations in respect of these two items in the past year and their reports have been clean for the last 2 years. On the basis of the above, you are required to answer. In respect of the fraud identified by the management, what is the amount of the fraud? 19 lakh. What shall be the reporting implications on the part of the auditor? Auditor needs to report the fraud in their CARO report, clause 11. Further, they also need to evaluate whether their report on IFC and the main audit report should be qualified or not. Considering the materialities, auditor may consider not to report this matter anywhere. This is also because of the fact that management has identified. So what? Auditor would need to qualify their main report as well as CARO report. Very harsh. Auditor needs to qualify their report as well as CARO report. They would also need to report the matter to the audit committee, central government, 19 lakh. No. Right? So CARO and also consider whether they need to put in IFC and main report also. Management of DT Limited did not carry out physical verification of inventory for 29. What could be the reporting implications on the part of the tax auditor in such a case? Since the tax auditor and the management both did not carry out the physical verification of inventory, tax auditor should report on the basis of the stat audit report of the same period or last period. It is a common practice to appoint tax auditors after reporting year end, and in such case, the auditor should carry out the verification after their appointment and roll back the procedures in respect of inventory. Accordingly, no reporting matter arises in such a situation. Tax auditor would need to evaluate the nature of the inventory. Further, the management should give a note in the respect of this matter in the financial statements, basis which no reporting implication would arise. Since the tax auditor and the management both did not carry out the physical verification, tax auditor would need to qualify the tax audit report. Tax auditor would also evaluate how the statutory auditor has reported this particular matter in their audit report. Right, so tax auditor should report on the basis of stat audit report current year, previous year. It is a common practice. No, it is very uncommon. Right, what will tell management to give a note in the notes to account? No. So tax auditors would need to qualify the tax audit report. Okay. Management of TMRT needs your advice in respect of appointment of common auditor for statutory and internal auditor. Management has been advised correctly. Statutory auditor of TMT cannot become their internal auditor. Management has not been advised correctly. Statutory auditor can become internal auditor. Statutory auditor can also become internal auditor. Like management has not been advised in the given case, statutory auditor of TMT would not be able to take up internal audit because they need to mention the same at the time of giving their consent letter and eligibility certificate at the time of appointment of statutory auditor. Management has not been advised properly. Statutory auditor of TMRT can also, yes, what does it say? That can also become their internal auditor. Sorry, right? Can they also become their internal auditor? No, they cannot become their internal auditor. And please advise BKP and associates whether it would be appropriate to drop the MOC and revenue recognition as significant risk. It would be appropriate to drop this option. Management override and revenue recognition should continue to be a significant risk, as if that continues to be significant risk at inherent level. MOC should be considered as significant risk, but revenue recognition may not be considered. Revenue recognition to be considered, but MOC not to be considered. No, we say MOC and revenue recognition should continue to be the SR, should continue to be the significant risk, right? So what happens, no, when we study these MCQs, in the process of MCQ, we also happen to, visit flying concepts here and there. Like, we happen to remember 0412, substantial interest, that statutory auditor cannot be appointed as internal auditor. Then they talk about the tax audit. Then there is a point regarding the CARO over there. What will be the reporting implications for the fraud and so. And then regarding the SA 240, which also is regarding the fraud, right? So management override of control and revenue recognition are the two presumed fraud risk as per